It's like up to 3%, I think, which is pretty cool as well.
That's great for like a tax account, right? Especially if you're not necessarily paying in everything you built up that quarter, paying that into the IRS or the state, having that sit, because that can accumulate a decent amount of money.
That's actually a really good idea. So much so that I'm a little annoyed at myself for not having done that already. I'm actually going to implement that already, like right away, right? Hey, everybody. James from 7-Figure SMP here, and I'm here with Bette, who is a CPA. And Bette is actually very familiar with a strategy as far as bookkeeping and accounting for entrepreneurs that was formulated by a gentleman by the name of Mike Michalowicz, and that is called Profit First. If you haven't read the book, obviously, feel free to check it out. Many of you who know me or have worked with me or been consulted by me know that I operate on these principles myself, and I've helped many of the clinics that we work with to implement it into their own business. But at the end of the day, I'm not a CPA, so I thought it would be a good idea to get a little bit of clarity around some of those profit first principles. And in addition to that, talk about entity formation and tax strategy and things of that nature. So Bette, thank you for joining me.
Thank you for having me.
Awesome. How's your day starting out?
Well, I'm in sunny South Florida, where it started out hot, and then it rained, and then it got hot again.
Sounds like a typical South Florida day, huh?
Exactly.
Awesome. So let me ask you this, because a lot of accountants and CPAs and things of that nature are either not familiar with profit first principles or even somewhat resistant to kind of implementing them on behalf of their clients. So what kind of made you open to that idea?
So I had actually seen Mike speak at an event many, many years ago. It was the Women's Success Summit in Miami. I don't think the event even exists anymore. And he is just such a charismatic guy. And he tells you, it's not advice that he made up. He kind of came to this advice because of his own disasters, financial disasters in business. So he has a great way of storytelling. And if you read the book, it reads very much how he speaks, if you ever get to see him speak or meet him. And I ended up reading like all of his books, and Profit First was probably his best, definitely his most well-known. And even though I'm an accountant, I have a master's degree in accounting, I took a lot of accounting classes, they always have us looking backwards, right? When you're an accountant, you're looking like, what happened last year? What happened last month? What happened last quarter? And when you're here in the real world and you're running a business, you're like, oh crap, I got to run payroll next week. Do I have enough money? Do I have cash? Like, how am I going to pay my rent? Right? So it's a completely different way of thinking. So I almost had to kind of ignore a lot of my accounting knowledge because I had to run my business, right? I have my own firm. I have to make my own payroll, and I had to use it for myself. So that's kind of how I got into it. And then what I found personally is that my business really didn't grow until I implemented Profit First.
That's amazing. Yeah, that's definitely a story that I resonate with personally, right? Because extremely similar thing happened to me, when I first started my agency. We ramped it up to a 6-figure run rate fairly quickly, right? So now you have this one business checking account where all the money's going in to and all the money's coming out of, right? And at certain points it looks like you have this gigantic pile of money, but obviously because you're a brand new business owner and you're you're naive, you don't realize that your margins are 50% or 40% or 35%, right? So depending on what your margins are, that big pile of cash that you have is actually nowhere near the size that you think it is, right? So I agree with you wholeheartedly in that I wasn't really able to progress my business forward until I started implementing Profit First principles into my business. Luckily, prior to that, in the stages where I was forming my entity and kind of setting up a tax strategy and things of that nature, I actually did hire a good CPA as far as, kind of how I should set the entity up and what the best, strategies were as far as tax advantages for my type of business. So before we dive too deep into kind of the cash flow management and the profit first aspect of it, you know, I mean, I'll just let you know the advice that I received, and I'll try to get your feedback on that. So, obviously, my entity itself is an LLC that files as an S corp, and the reason I was told to do that was because of the tax advantages, the inherent tax benefits that are available when you do it that way. So, you let me know. Did I get good advice, bad advice, incomplete advice? What would your feedback be there?
I think that's probably really good advice, actually.
Okay.
What I usually tell people starting out, if you're going into business, set up an LLC. And the reason is if you just operate under your own name, right? We call that a sole proprietorship. Everything you own is at risk, because if somebody sues you and you're operating as, Joe Smith, whatever your name is, you have no liability protection against any of your assets, because everything in your name, if someone wants to sue you, they can claim anything. But if you make that simple adjustment of setting up an LLC, and it's not a big deal to set it up, you can go to attorneys and they'll probably charge you a bit more, but you'll get the right documentation. In Florida, it's really, really easy to set it up yourself. Not necessarily, the way to go, but if you're kind of strapped for cash, you can do it. It's not hard. But you set up that LLC and you operate out of that LLC. First off, your taxes change not at all. There no way whatsoever do your taxes change. But now everything you do in the business is like secluded from the rest of your life, right? We call it asset protection because everything happening in that LLC stays in that LLC. And if someone wants to sue you operating in that LLC, they can't get your house, they can't get your car, they can't get, whatever it is that you have. So it's great for the asset protection. And then LLCs are super flexible, right? So you mentioned converting it to an S corporation. I see it all the time. LLCs taxed as S corporations. And that is where the tax savings start to come in. So if you're a sole proprietor or you're an LLC, you're taxed as a sole proprietor, even though you are an LLC. If you have one owner, everything you make is subject to two taxes: income tax, which we all know and love or hate, and a self-employment tax, which is basically 15% on top of, right, in addition to the regular taxes that you think of when you have to file your taxes on April 15th. That's a lot of money. That's a lot of money going to taxes. So by making that one little election to be taxed as an S corporation, that self-employment tax goes away. So now all of the income in your S corp is only subject to income taxes.
But right. And then you
a big button there. There is a big button.
You are still taxed on what you pay yourself, right?
Sort of. So you have to run payroll. Mm-hmm. That's the rule. That's the big rule with S corporations. If you're an S corporation owner, you have to be on payroll. So now you're paying payroll taxes, which the reality is it's the same as self-employment taxes, but you're allowed to control how much you pay yourself as long as it's reasonable. And there's no definition for reasonable according to the IRS, right? But they give you an extreme example. So if your business is making, say, $1 million in profits, and you're like, well, I'm going to pay myself $25,000 and take the rest out as equity distribution, the IRS will come back and say, this is not reasonable. You can't say I'm a $25,000 a year employee who created a company that's making $1 million, right? It's not reasonable. So that's the only caveat there. But for most people, especially when you're starting, you're not going to start out making $1 million. If you know how to make $1 million from day one, please show me how, because I don't know how to do that. But you can ramp it up. You don't have to start out super high, so you can kind of adjust the payroll and you can control that tax a little bit. So you're cutting it down from everything I make is subject to extra 15% to just what I put myself on payroll for, subject to 15%. So it could be a significant savings.
Right, right. And that actually does bring up an interesting point. So let's say, like, for what I do myself with my wife is we pay each of us enough to kind of cover our bills and buy groceries and things of that nature throughout the year, right? So then when there's profit sitting there at the end of the year above and beyond what our payroll was to our other employees and what we paid ourselves, what do we do with that in order to be compliant, and how is that money taxed?
Sure. So you're taxed on that profit, right? That net income. That's what you're actually going to pay taxes on.
Hmm.
It's usually the same as cash for small businesses. So
Okay.
if you have at the end of the year, your profit says like, okay, we netted, $10,000, you probably either took $10,000 of cash out of the business or have $10,000 of cash sitting in a bank account.
Hmm.
Usually. If you have credit cards, if you have loans, that might not be the case, but in general, they kind of go hand in hand. There's a lot of technical accounting reasons why they can be different, but for most, I would say most small businesses, it's the same. So one of the benefits of having an LLC, whether your tax is an S corp or not, is those profits that you make throughout the year, you can take out the cash and it has no tax implication. Whether you take it out or leave it in the business, it doesn't have any tax implications whatsoever. Profit First might have something to say about what you should be doing with that money, but
Hmm.
tax wise, it doesn't matter.
Yep, absolutely. Which obviously I do want to get into. So, obviously the reason we're making this video is because, I've consulted with over 400 SMP artists this year alone, uh, and work with dozens of them currently. And a lot of them, especially when they first start out, they end up paying X amount of dollars, whether it's $3,000, $5,000 or so to get certified. And sometimes they go to multiple certification courses. But then once they're done learning the skill, they really are kind of lost in the woods when it comes to, what the next steps are as far as properly forming an entity. Obviously, they're going to need some kind of studio, whether it's leased or owned, in order to actually perform the service. And then they're also going to need to actually be able to generate interest, right? Acquire clients and service them. So that's kind of the reason why I wanted to make this video with you, because like I said, I've actually helped a couple of different clinics that we already work with to implement profit first structures into their business. But at the same time, they already had a space to work in, right? They already were acquiring clients, and we've been able to help them acquire even more. So we were really just helping them get their books in order because they were in a scenario where the ball was already rolling, right? They're already making money. And we just looked back and said, okay, so what was your average revenue over the last 12 months? Okay, you fit into this bracket.
Yep.
So we're going to start by doing, 40% OPEX, 35% owner's pay, 15% taxes, and 10% profit. And then we can adjust on the fly if we need to. But how would you do that from square one with a brand new business, whether it's an SMP studio or any other that is starting from zero? What advice do you give them as far as following those profit first principles right out of the gate?
So some of it is you have to look at, um, profitability as a mindset, right? So, and you can use this system with anyone. You're just going to change what the percentages that you're allocating, those target allocation percentages, you change what they are. So if you've got a startup company or a brand new anything, right? It doesn't have to be like a tech startup, just you're starting a new business. Um, Profit First suggests take something as small as 1%, just 1% of the revenue that comes in, and suck it away in a little savings account somewhere where you're not going to look at it, because the intentionality behind the focus on profitability, even from day one, is going to be affecting how you mentally are thinking about the business finances, right? And it sounds like silly, right? Like 1%, who cares? It's going to be such a small amount. But it's like working out, right? It's like building muscle. You're building that muscle, you're building that habit of I need to build profitability into my company or it's never going to be profitable because there's always things to spend money on. I don't know if you've ever run into this. I don't know. I can spend all the money. Like that part's easy. The making it's a little bit harder. But really thinking about, what is my profit goal, even if this year is only 1%. Next year can it be 2%? Can I work up to that 5 or 10%? And if you're doing it from day one and you're making these incremental increases, you'll get there. But if you don't never have that intentionality, you're going to find yourself a few years down the line going, how come I'm working so hard and I see the money coming in and where's it going? That's like the number one question people have for me. Where's my money going?
Yeah.
Especially we do a lot of taxes as CPAs. I hand someone their tax bill and they're like, what do you mean I made that much? I don't have that money. Where is it? And it's like, oh, that's a good question. Where is your money? Right.
Yeah, and that's obviously, what you're alluding to there is certainly a big part of the reason why implementing profit first or some type of structured bookkeeping system into an SMP clinic or any business in general is so important. But a lot of people might be a little bit taken back when they're hearing 1% or 2% or 5% profit. So
Yeah.
obviously, I think it's important to clarify the difference between profit and owner's pay.
Sure.
And obviously, I have a general chart that I typically operate off of, which I'm going to add to the stream right now. So obviously, this chart is pretty cut and dry, other than the one thing where it can get a little hairy is the 0 to 250K, right? Because obviously if you're doing 100K a year, that's fine, right? And if you're doing 245K a year, that's fine. But if you're doing $10,000 a year, that might be hard to abide by, right? So when it comes to scalp micropigmentation specifically, I mean, they can get into these ranges quite quickly, right? Because at the end of the day, the procedures on average are going to range anywhere from 1,300 to 3,500 a head, right? And what we find is that the national average is around 2,000, right? When you balance all the small jobs with all the big jobs. So it really doesn't take them a ton, to get into the six-figure range if they're able to kind of structure things properly and establish a marketing budget or a marketing game plan and stick to it. It really, I mean, we're talking about 5 clients a month to get, to a six-figure business, right? So I think, kind of starting on that column A is probably a good place to start, but I'm also curious to see, because I've never implemented or been in a profit first business that was doing 8 figures. I'm curious to see your thoughts on the opposite end of the spectrum as well. So let's start with column A and then we'll take it from there.
Sure. So I would say the majority of my clients fall in A and B, right? Especially when we're implementing profit first. The thing that I think is really hard in column A is that until you break that 6-figure, and that might even be a little low at this point, it's hard to get to the I'm a one-man shop to I have staff, right? That's the hardest thing, I think, in that growth trajectory. I know for me, I started with a part-time person who within a couple months became a full-time person. And then a few months later became 2 people, right? It goes very, very quickly because hopefully you're building systems alongside dealing with these financial things, but it starts to snowball, right? And that can either be a snowball into going out of business and bankruptcy if you're not paying attention to the profit, or can snowball into growth. I think it works really, really well in those A and B columns. And we call them target allocation percentages because they're targets. It's put together by research that Mike did in writing the book to come up with these numbers. But I will tell you, as a Floridian, I do not put away 15% into taxes because we don't have any state income tax, right? So it's too high for us for the most part. When I first started, I would allocate it like that. And then I found like, oh my God, I have this huge overpayment. Let me lower it and reallocate it to places. So this is a guide. And if you're like, wow, 10% profit, like, my business, it just can't support it. That might be the case. If you're in a really high rent area, right? Whether you are renting space or own it, it might not work, or a high just cost of living area and staffing is really expensive. Like Miami right now, our unemployment it might as well be zero. It's so very expensive to hire good people right now down here that our salaries are getting real inflated. You have to adjust it, right? You personalize it to your business. I think the thing that's also hard in column A, slightly less so in column B, is the interplay between owner's pay and operating expenses, because sometimes it's not so clear cut, right? Especially in that column A. I'll give you a great example. Cell phone, right? The company owner's cell phone. Is that owner pay or is it an operating expense? Right? Which
Fair
one?
point. I mean, at the end of the day, I think it depends on, and obviously you're the financial professional, so I'll just let you know my perception as a layman, and then you correct me if
Sure,
I'm wrong.
sure.
But if my business is a home business, then I would assume that cell phone would be an operating expense. But if I have an actual office where I pay for a phone there, then that phone is operating expense, and my cell phone is a personal expense. That's the way I would perceive it, but I could be wrong.
Um, I almost always categorize things like cell phone or home internet. If it's a home internet and you have a home-based business, maybe you can make the argument. But I usually say, would I have this expense if the business didn't exist?
And the
Right?
answer is yes, with cell
Right.
phone and internet.
Right.
Yeah.
So it's really kind of owner's pay in that regard, right? So the owner pay doesn't mean if I make $100,000, $50,000 has to be salary to me, right?
Hmm.
I think of it less as owner's pay and more as like owner benefit, because you can have those profit distributions, not profit as he's describing it here in the profit line, but the accounting profit, right? If I have net income in my business and I have equity in the business and I want to take some of that cash out, okay, I could say 10,000 is an equity distribution and 40,000 is owner pay. And there I got to my 50,000. Or,
Hmm.
oh, I run my cell phone, I run my home internet, I run my newspaper subscription, all my magazine subscriptions, office supplies, whatever it is, like it's really for my house or for myself personally, and I would buy it anyway. I'm going to call that owner benefit rather than necessarily just OPEX. And
Hmm.
you have to be a little bit honest, right? Like with yourself at least, or if you're working with a profit first person, honest with them. I did have a client recently where I was going through profit first with them, and I'm like, listen, we got to look at some of these expenses. Talk to me about the travel. How much of the travels for business? And he was like, not a single dime. And I was like, oh God, okay. Like maybe it shouldn't be on your books like this then, like I get it, you mix a little business and pleasure, like don't put all your personal stuff in and nothing for business. That's a little bit of a nightmare, especially if you get audited. um, but there's certainly benefits to having your own business and being able to kind of sneak things into the business that if you just have a W-2 job, you don't really have that luxury because you've nowhere to sneak it into. So it's just something to keep in mind.
Hmm. Hmm. Absolutely. And I mean, obviously, when it comes to operating expenses, especially as it pertains to a scalp micropigmentation clinic, it's not really that difficult to figure out what your operating expenses are going to be, especially
Right.
if you are a solo. I mean, it's either your rent or your mortgage. If you've decided to actually get your own building, in most cases, it's going to be rent. And then obviously, your operating expenses are also going to include your equipment, right? What you actually need to perform the procedure, and your
Yeah.
furniture inside your studio and things of that nature.
Yeah.
And then in addition to that, it's really going to be marketing and advertising, right? So that's really your OPEX.
I would throw insurance in there. I imagine you
Right.
got some
No, that's
insurance
fair. That's
expenses.
fair. Yep, 100%. Yep. So it's really not that convoluted, right? It's like those
Yeah.
are your operating expenses. Of course, if you do go to, scalp micropigmentation specific training and or
Mhm.
events, those will be able to be paid out of operating expenses as well.
Yep.
So I totally agree with you. I mean, I think that for me, when I was in that A column way back in the day in 2017, um, I think that I think that for me at that time, I think the hardest thing was paying myself 50%, right?
Yeah. Yeah.
I don't think that I was doing that.
Yeah. Well, that's why I say
Definitely
look for
not
the
when I
owner
was
benefit.
definitely not when I was only at 100K run rate. I was
Right.
not paying myself 5 grand a month. No way. Right.
Right.
Now,
But
to
that's
be fair, when I first started my business, I also had a job, right? So that kind of
okay, it's a
convolutes it
little
as
different.
well because you're like just reinvest, 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 grow the thing, grow the thing. But then, for me, I left my day job within 10 months, right?
Mm,
So you were already operating your business in a way where you're just aggressively reinvesting. Then you stop having an additional income. In my case, it was fairly healthy, the income that I had, and then now you're strictly reliant upon the business income alone, right? And that's where profit first became huge for me because, like I said, we were having better and better months, and obviously that's the reason I felt comfortable enough to leave my day job in the first place. But then you have to pay your own health insurance. By the way, where does that fall? If you're an owner operator and you're paying for your health insurance for yourself and your family, is that taxable income then, or is that not taxable income?
oh man. So I think that's one of those things that also kind of falls into that owner's pay versus OpEx, right?
Mhm.
If you're paying for it through the business, I would say I would consider that part of my owner's pay of of where's it gonna fall on here, owner's pay. And then there's some very specific tax treatment also. So if you're in that situation and you've got health insurance, even if you're paying for it through one of the like the exchanges or things like that, you really need to talk to a CPA before the end of the year so that you can fully benefit from that what's become a ridiculous expense. Um, it has to be just reported in a very specific way through payroll and whatnot. So I would say that's putting my tax hat on. That's one of those things I see small business owners screw up so often, and it can be a significant tax savings because basically, if you're an S corporation owner and you own more than 2% of the company, which if you're the only owner, you certainly own more than 2%. It has to go on your W-2 in a very specific way that any payroll company knows how to do it, but you might not realize that you have to do it that way. And we tell all our clients, we're like, make sure you do it this way. Inevitably, you get a handful that missed the memo and did it wrong, but it does have big tax implications come tax time. So,
Mhm. Mhm.
but yeah, I
Okay,
would
so
all that.
basically, you would be better off to pay it from the company, or would you be better off to pay yourself the owner's pay and then pay your monthly premium to your health insurance company from your personal checking account, and then write that off as a non-taxable
Uh,
as non-taxable
eh,
income?
it's at the end of the day, it's kind of the same thing.
Okay.
In a
Okay.
money is fungible situation, it doesn't really matter because we're going to deduct it on your business, right? Whether you paid for it personally or if you paid for it through the
Okay.
company. So it doesn't matter. It's real specific, like nitty. Like this is so in the weeds right now. Is specifically how do you report it on your W-2,
Okay.
but it can have a big impact overall on your taxes. So
Yeah, leave it to me to get too deep into the weeds. It's just a tendency that I have. But all good. I'm glad I'm learning stuff on this as well.
yeah,
So
for sure.
cool. So then as as the businesses ascend, right, as they kind of move into the B, C, and D, you know, columns there,
Mhm.
um, what I found, and this is just, having gone from A to B, B to C, et cetera, is, when you first cross that threshold, it's a little bit of a jagged pill to swallow, right?
Mhm.
Because you're going from A to B, for instance, you're going from paying yourself 50% of 249,000, right?
Yeah.
Whereas once you're at 251,000, you're only paying yourself 35%. So how do you mentally prepare, or how do you deal with, crossing those thresholds at the beginning, as you're literally taking a hit,
Right.
as you cross that threshold?
Right. Um, I mean, I think, things don't happen instantaneously, right? As many things in life these days, it's a spectrum. So, like I've had in the past where we're in a big growth mode, I've brought in employees that I was paying more than myself. And I realized that kind of like went against the whole like profit first, like, where are you on here? But I knew like what got me here wasn't going to get me there. And maybe, you know, 8, 10, 12 months, you're flipped on the other side. So it's just a planning issue, right? It's, do I have, we call them a vault account, right? Do I have a vault account? Do I have funds that I saved up? They have a really specific, methodical way of dealing with savings and profit first. So we're putting all these profits away in the savings account, right? And every quarter, you're supposed to take half of it as a profit distribution and go celebrate. I'm very bad at this part. So a
Me
lot of times
too.
I'm like,
Guilty as
yeah,
charged.
just transfer it to my personal account. Like I'm going to go grocery shopping. Like that's not a celebration, but I have, from reading other things, I found that it's actually really important to celebrate, because you need to celebrate the wins, right? You have a business, it's got profits. Even if you took $5 out, like go to Starbucks. I mean, I don't know if any of their drinks are that cheap anymore, but you're supposed to do something that's going to connect in your brain the feeling of, I did this right thing over a period of time, and this is my reward. And I need to light my brain up in that reward center so that I keep doing this thing.
Yep.
It's hard. It's hard to, like, it's, again, it's a muscle you're flexing. It's hard to get into that. Um, but you'll also end up, since you're only taking half, you're going to build up this other amount, and you kind of are building a vault there, right? Like a savings, a cushion, something like that. You can move more money, if you need to, into a vault account as well. If you're like, look, I know I'm going to bring in this real expensive person, I need to bring in a manager of some sort or somebody high level to help me. Um, Let me save up some cash, and then I can do it. That's the preferred way, if you can, right? Life doesn't always work in the preferred ways that we would like to, but I mean, part of what was really beneficial, and this, we were saying this before the recording, and I don't wish another pandemic on anybody, but the SBA was handing out, um, loans with no personal guarantees, right? And I was like, how am I going to turn down a low interest, no personal guarantee loan that I could not get from anyone anywhere else? Let me do it, and let me really invest in internal systems and structures, and bring in some people, like some higher level people that I needed. So it was kind of like a vault, but as a loan. So, you have to deal with it
Mhm.
now on the OPEX side. I have to deal with it, but that's effectively a vault, right? So money is fungible, right? So would it have been better if I saved it up? Yeah. But when that opportunity came about, I kind of reverse vaulted, if that's a thing, right?
Yeah, and
So I
at the end of the day, if you were able to actually put it to good use and propel your business forward,
right,
that's really what the loans were designed for, right? There were
right.
there were misuse and abuse of those loans that we don't
Oh,
need to go into on this
right.
particular
That's a
video.
whole other
That
show.
exactly. So yeah, so that's really interesting. Now, I mean, at the end of the day, if somebody is just starting their own thing, right? Or even if they're, let's say they're a barbershop owner, or a tattoo artist already before adding SMP to the mix. Because that's a lot of what we see is barbers, tattoo artists, PMU artists that are now adding SMP to their repertoire, right? They're getting certified in a new skill. That's obviously separate from the people that are, just regular W-2 employees that a lot of times end up getting it done and they enjoy the results so much that they want to go ahead and learn how to do it and start a business out of it. Obviously, those are two completely different scenarios, right? Because one's already a business owner. Although a lot of times I find that even though, the barbershops and tattoo artists and PMU artists are already business owners, that doesn't necessarily mean that they had good habits in place as far as cash flow management and things of that nature.
Right. Yeah.
A lot of times they're still just pooling all their money into one big account and not really kind of segmenting where it ought to be going. But let's say it's the latter half that I described, where it's W-2 people who are trying to start their own thing. I know that I believe that we discussed that Mike Michalowicz is very much in the Dave Ramsey vein of really just cash flowing things, bootstrapping it without putting yourself in debt and things of that nature. I mean, I know for me, what I was able to take advantage of was definitely, unfortunately, 0% interest credit cards that do carry, a personal guarantee. But there's a couple good ones, and some that even have to be repaid every month that offer really good incentives and things of that nature. So, what is your thought process there, Bette? What would you do if you were just starting something up and you didn't have, any IDL or something like that, which most people, like you mentioned, are not going to run into at any time soon, hopefully, right?
Hopefully, yeah. I mean, I think I don't know if I've ever seen somebody who started a business and didn't at least need a credit card, right? Unless you've just got a war chest already, if you've been saving up for it and you're like, okay, I'm ready. I finally, I have, 3 to 6 months of my anticipated expenses already saved up. It's going to be really hard to jump in, I think. I've also done the zero interest credit cards. If they keep raising the rates, I don't know how many of those will even be available, but it's not a terrible idea. I mean, the thing also to keep in mind, when you're first starting a business, lots of people have lots of ideas for businesses, right? No bank wants to give a new business money. It's just the reality. SBA, you maybe can if you're buying an existing business or if you're buying real estate, like a business that's sitting in real estate, probably a bit easier to get than just give me a business bank loan. But you're going to still have personal guarantees. And I don't know how easy it is to get that kind of stuff, right?
Mm-hmm.
And the current climate.
Yeah, and that might honestly be a good route for the other group of people who already are business owners. If they have an established history, then they might be able to go the SBA loan route for sure.
Yeah. It's like that saying, they'll only lend you money when you already have money.
Exactly. Yeah. 100%.
They'll lend you money when you don't need it. It's like, great. Well, okay. But when you do need it, oh, nope, nobody's home. So that part is hard. I think the real thing for people to think about is come up with a plan, right? Try to estimate, even if you don't get the numbers exactly right. What is my rent going to be? Or what would my mortgage payment be? What do I need to live on personally? What are my costs going to be? What are my utilities, electricity, supplies, all of these things? Like, what is it going to run me? And then try to figure out how much cash does that equate to. It might be less than you think, right? You might think like, oh, I need, $200,000 to get started. Maybe you don't, because once you have the clients, once you have the money coming in, and now it's going to be like we call them like rolling budgets, right? So I might have needed this much saved up to start for the first couple of months, but now look, I have clients. You know, what did you say? You only needed like a handful of clients to hit 6 figures, right? You'll get there.
Right. So if you're talking about, a scalp micropigmentation clinic specifically, I mean, so here's the thing, and this is a big part of the reason why I wanted to do this video with you. It's that a lot of them have the perception that, okay, like every procedure is $3,500, so I really only need like 3 clients a month and I'll have a 6-figure business. The reality is more like the average is going to range from 1,300 to 3,500. That's the average, right? Now, some of the premier artists charge 5K because, they have brand recognition and things of that nature. Right. But even they are not going to average that amount, right? So these are the bigger jobs that are at that end of the spectrum. What we find based on data is that the average is around 2K, right? That's around the average nationally per head. And that means that obviously you need to be able to have around 5 new clients per month. Now, the difficulty is, somebody gets certified, but they have no portfolio to speak of, right? So it's definitely a tricky thing because at the end of the day, this is a tattoo. This isn't going anywhere, right? So, building up a body of work in the first place at kind of a discounted rate or even free is essentially just, part of the game, right? As far as getting that aspect of it done. But once you have, 5 or so examples and your work is actually good, then you can really start marketing yourself, right? But the issue that a lot of people run into is that they think that clients are just going to appear out of thin air. Now, well, everybody knows they need an accountant, right? Everybody knows they need an accountant, but there's a lot of them, right? Scalp micropigmentation is kind of at the opposite end of the spectrum in terms of market sophistication, where not everybody even knows it's a thing, right? So depending on the market that you're in, you might actually have to build awareness of the service as a whole in the market, right? And that can be time intense, money intense, labor intense to generate that awareness in the first place. And then other people think they're in a competitive market, but the reality is there is no competitive market in scalp micropigmentation. I mean, I'd rather be in New York City or LA or Miami marketing for somebody because the big players in that area have already spent the money to educate the market. So now there's people actively searching for it, right? So, you're capitalizing on the money that they already invested educating that region, right?
You're not on that bleeding edge. You're a little behind.
Exactly. So, that's what's interesting. And I really just want people who either have gotten certified previously and never did anything with it, or people who get certified in the future to have a game plan as far as forming their entity. Once they start making money, what does that look like in terms of distributing those funds? And, you said, hey, like, you have to exercise the muscle of celebrating, once a quarter with half your profit, right? I think that the folks in this particular space might have the opposite end of the spectrum, where they might be celebrating a little too early, right? And a little too often. So, making sure that you're actually putting the money in the buckets where it belongs. And like Bette said, maybe you're overpaying on your taxes. That doesn't mean you need to send it to them, right? You're putting it in a tax checking account. I just wanted to make that clear because I do that almost intentionally at this point, right? I pay the 15% into my tax checking account, knowing that I'm overpaying it, so that this way I have a little bonus at the end of the year, right? It's like, okay, like that overpayment that's sitting there in my tax account obviously has to get rolled into profit and then distributed at the end of the year. But
it's like another vault, right? You have more tax than you need saved up. So it's like a vault account almost.
Exactly.
Kind of like combining
I'd certainly rather it be that way than the opposite way, right? Where like I didn't fund the tax account properly. Now I have to pull from profit. or owner's pay to put it into
Right.
the tax account.
Right.
That's obviously what I don't want, right?
Right.
So,
And
um,
and I'll say as a CPA who's done a lot of taxes for a lot of years, I I have people do, even when I don't do all of Profit First, I'll be like, "Hey, I see you owe $50,000 in taxes and you're having like a total meltdown. How about this year? Every time you get $1 in profit, what if, like, hear me out, what if you went and put, you know, 10 cents of it or 15 cents of it into another account? And then every quarter you could pay it in." And people are like, "Oh, that's a good idea." I'm
so
like,
you just
"I'm going
don't
to take
use
credit."
the dirty word of saying profit first, because then they're gonna get triggered, right? But
Or they're not even, necessarily coming like asking like, "Hey, I need help with my cash flow," right? So sometimes it looks different for different people. They don't know what it is that they need, and they don't know that there's systems out there to help them. They're focused on this one pain point. I'm like, "Well, I can help you with this one pain point." And it's like, well, if you plan for it, right? If you take some money and set it aside, and people are always shocked. They're like, "Oh, that's a good idea." I'm like, "Yeah." It's not mine, it's not original, but and some of that is a bias that I've just been doing tax for so long that I've just seen it over and over and over and over again, that people get walloped in April, right? I get those April 14th calls. "Oh my God, I owe so much. What can I do?" Well, not a whole lot now. In April, we can't do a whole lot about last year's taxes, but we can work now for next year's taxes, right?
yeah,
And
yeah,
if you're putting the 15%, but it's too high, right? And your taxes aren't that high, well, if you owe back taxes, you can use it for that also and help dig yourself out of that hole.
that's true. That's extremely true. Now, as far as how we manage profit first, and what we've helped other SMP clinics to implement, is through the use of Relay,
Mm, yep.
where we actually set up automated rules and things of that nature, so that we don't even have to think about actually distributing the funds on our own, right?
Gotcha. Yeah.
And that obviously has made it a lot easier, because I used to run it, out of just TD Bank, and then I had to have 5 separate checking accounts, and there was
Yeah.
fees
Yeah.
for all those checking accounts and minimum amounts for all those checking accounts, right? So, what is your feedback there? What is the best way to manage it? What's the best way
Mm,
to make sure that what's the best way to make sure that you're actually honoring kind of the rules, or the percentages that you're supposed to be abiding by?
right. Well, okay. So there's like the good and the bad, right? I have a few clients who are doing the Relay Financial thing. There's other fintech banks out there. The thing you have to be careful of is not all of them are FDIC insured, and as we saw recently with Silicon Valley Bank, that can be a big deal, right?
Yep.
So FDIC insurance is if something goes sideways with this bank, the feds will insure your money, right? So if I've got $100,000 sitting in, internetbank.com, which I don't know if that's a real thing or not, but I just made it up. If they go under, okay, the feds will make sure you're made whole. If it's not an FDIC insured fintech bank, well, if they go under, you might just lose your money, right? So that's a scary thing for some people. They don't like that. Uh, I happen to use Capital One. They had years ago these types of accounts called a Spark account that were 100% online. Back in the day, there was virtually no Capital One location, like physical locations anywhere. And I didn't really care because I had an old Bank of America operating account that I still use. It's still my receipting account. So all the money comes in there because it was hooked up to my PayPal and my Venmo and this and that. And it still all comes in there. The Having a lot of bank accounts in different banks and not paying a lot of fees is a challenge, especially early on, right? So a lot of times you're looking at smaller banks, maybe the local banks if you have them, credit unions. Um, I think we have, as Profit First professionals, I think we have a list. I don't know how up to date it is, but there's a list of banks that people are working with, and I believe Relay has a special relationship with Profit First. Um, I don't know exactly what that entails, but it exists. It exists for sure. But yeah, I mean, if you just go to one of those big traditional banks and you're like, hey, I want to set up 5 checking accounts, they're going to look at you like you're crazy. Right. And then they're going like, all right, if you want to pay us $30 a month or whatever it comes out to, uh, they'll take your money for sure. So you do have to be a little bit, do a little bit of homework, be a little bit diligent about, how do I find something that works well with the system, but is also going to help me hit my financial goals of not bleeding hundreds of dollars a month of bank fees. And it's out there. You just, don't expect the big national banks to be your solution. You're going to have to like look around a little bit, see what
Yeah. Yeah. And just to add a little bit of clarity there, Relay, I believe, is the bank that actually backs the software is called Thread Bank, and they are FDIC insured up
gotcha.
to 2.5 million. So
Yeah.
I
Some
don't
of them
have
out there
2.5
are.
million sitting in the account just yet. So
Yeah,
I'm
I
not.
like that. Not yet. We'll get there.
So I'm I'm at a point where, anything that I have in there would be, theoretically FDIC insured. Again, I
Right,
don't want to
right.
go too deep down that rabbit hole. But the reason that I like it, obviously, is because of the automated rules, right? And they're
Yes.
really customizable in terms of what you can do. And you can also change them on the fly, right? So you're not like, just because you set up an automated rule doesn't mean you're married to it forever. And basically, the thing that I find useful, and that I've actually hopped on and set this up with a couple of other clinics as well, is that you can literally set up automated rules to run every night at midnight, right? So this might be tough to see again, but basically this is a 40% OPEX rule set up, right? Where it's just, 40% goes into OPEX, 35% goes into owner's pay, 15% into taxes, and 10% into profit. And it automatically runs out of income every night. And then I also keep $100 in income just so that there's not absolutely $0 there.
Yeah.
But you could make that whatever, right? Whatever your average transaction is, you could say, hey, keep $2,000 in income and then distribute it, right? In case you ever needed to issue a refund out of your income account or whatever the case may be, right? So
Yeah.
that's the thing that I find super helpful about it, because prior to, we were doing, I think we had, so the one caveat that I do want to point out here, from my own experience, is the one thing you can't automate, and it's not surprising, right, is transferring it out of their institution into your personal stuff, right? Like
Right.
you can't, so like we have a Chase savings account. So I can't automate liquidating the profit into my Chase savings account, because obviously they don't want it to be that easy for the money to leave their institution, right? So they
Right.
make you manually do that. Um, Not a surprise, but ultimately, I can have 6, 7, 8, 9, 10 checking accounts. Then I can also create unlimited virtual cards and all that kind of stuff, which for me, sneaky side benefit is, if I want to sign up for like a free trial for a software and I don't want to forget to cancel it, I literally create a dedicated virtual card for that free trial and then immediately freeze it right after I sign up. So that this way, if they do go to rebill me in 7 days or 14 days, they can't, right?
Gotcha. Gotcha.
So, that's kind of one of the other things that I like about it. Now, it's not perfect, right? There are certain things that, certain people that I've introduced it to are like, man, I wish it had this, or whatever the case may
Mhm.
be. But for me, it's been the best solution, the most profit first friendly solution that I could find. And they also offer like a high yield savings account within Relay now, which I haven't even used, but it's like up to 3%, I think, which is pretty cool as well.
That's great for like a tax account, right? Especially if you're not necessarily paying in everything you built up that quarter, paying that into the IRS or the state, having that sit, because that can accumulate a decent amount of money.
That's actually a really good idea. So much so that I'm a little annoyed at myself for not having done that already. I'm actually going to implement that already, like right away, right? Why wouldn't I just create another account, make it a high yield savings, and move the tax money that I'm not touching anyway in there?
Right.
So yeah, great
call. Can I make an argument against doing all of this automation? So
yes,
at least in the beginning. So we get a spreadsheet from Profit First that you can change what those percentages are. It looks shockingly like the screen you just showed us, right? Okay, put OpEx this amount, that amount. There's a line at the top for your revenue. And then it tells you, here's the amount you need to move into these accounts, right? And I think there's something great about a business owner having to be so like manually like touching the screen and having to see, like, if I bring in $10,000, what does that mean specifically for my OpEx? What does that mean for my profit? I think that you get a better feeling for what those numbers mean, at least in the beginning, when you've got to do those movements manually.
I think that's extremely fair, and I think I might have jumped the gun because obviously I did that for a couple of years before Relay was even a thing, right? So we essentially did it the same way, where the 10th and the 25th of every month we manually transferred everything, and it was a pain in the ass, to be honest with you.
Yeah, it is.
So I think I got that benefit, right? I got that benefit that you're talking about, and then said, okay, I want to automate
it.
Yeah.
And I don't love that 10 and 25th. Like it, and for anyone who's watching this doesn't know what we're talking about, basically in Mike's book, he says bring all of your money into a receiving account, and then twice a month move the money around so that you can, write your checks to pay your bills all like the week after you move it. So it's like, okay, at this point, because he wrote this book a few years ago, at this point, who writes a check? When I need to write a check, I can't even find it half the time. Like, is this a checkbook? Is this still good? Do I have this account? Right. So I don't know who's sitting there like literally writing out checks once a month. It's a little bit crazy. And two, and I heard this from other Profit First people as well, is that 10th and 25th isn't necessarily a great rhythm. And for myself, when I first tried it, I would find if one of those dates fell on a weekend, I just didn't do my transfers, which, as you can imagine, ended up being disastrous, because then you're like getting notifications from the payroll company, like, you don't have funds in there. And I'm like, oh, I need to go emergency wire money around. Right. So I like the every Friday, every other Friday. If I'm really busy, it might just be, one Friday. It depends on the time of the year, the season. Like, we're real busy in the beginning of the year. I have a lot of cash that comes in because I say it's our Christmas when you're tax CPAs, that, the beginning of the year, everyone's coming to do their taxes. I either need to do it, not so frequently because it's bigger dollar amounts, or, I'm doing it more often because I'm like, oh, it's just chaos and I want to see what's going on. But that 10 and 25th, it doesn't do it for me. I like Friday. Friday's like my day that I work on my business and not in my business, right? It's do the planning, do the stuff that I need to do to run the business, not just do the work. And for me, that worked much better than the 10th and the 25th. So I don't love that flow. It just, and you gotta make it yours. It's business finance, but it's really personal finance, right? So you got to personalize it to yourself. Because also for most of these folks that are in that column A, column B, from that revenue category up to $500,000, this is probably your primary source of income. This is probably your baby. This is your job. This is what you're doing.
Yep. Yeah, no, absolutely. So, and I agree with you. I mean, it was definitely tough to adhere to that 10th and the 25th, and we would find ourselves having to do it more frequently when we were doing it manually. Now, what I'll tell you is, and again, don't shortcut, as Bette advised, don't shortcut the process of manually doing it so that you get the benefit of knowing what does $10,000 in revenue actually mean for me as owner's pay or profit or
Right.
OPEX or whatever the case may be,
Right.
right? So, but with that being said, now that we have it automated for what happens in the internal business accounts, what we do is we run payroll on the 10th and the 25th still because of Mike, right? And we pay ourselves. We do our own distributions on the 10th and the 25th as well, because everything else is automated anyway. So anything else that needs to be paid for, whether it's a subscription or whatever the case may be, is going to be taken care of, because those are being distributed literally every single night using those automated rules, right? The other thing that was cool about Profit First that you would lose out on if you started with this automated fashion was having the profit account be somewhere that doesn't have online banking, that you physically had to drive to, and that you had to go there with your spouse.
I never did it.
Money out of
I never did it. No,
we
no,
did it. We actually did it before we moved to Relay.
Really?
And it was cool, man, because I had no idea, oh, crud, we got 30 grand in there. You know what I mean? Before you know it, because it adds up quick,
Yeah.
So you think 10% is nothing, but at the end of the day, it doesn't have to be a gigantic business. If you're doing, 25 grand a month, 10% is 2,500, right? And you're socking away 2,500 a month in an account that you literally don't look at because you don't have an app on your phone that'll tell you how much is in there. It grows quicker than you think, right? So
Yep.
Whether it be 1%, 5%, or 10%, as Bette mentioned at the beginning of this interview, it's really about developing the mindset that you ought to be paying yourself, A, right? And B, that you ought to be taking profit. And it will literally prevent you from resenting your business. That's, at the end of the day, that's essentially the reason it's so important, right? Because trust me, I built several iterations of my business that I resented because I was not abiding by these principles. And once I did start to, life became a lot less hectic. So, Bette, I just want to thank you so much for spending this much time with us. We've been on
for sure
just a little bit over an hour here,
time.
and I definitely appreciate it.
Can I give you one closing thing? Okay, so if you're trying to run Profit First in business, and you go to your CPA and they're like, you don't need all these accounts, go find a different CPA, because it's really not a big deal for your accounting. It's not a big deal for anything. They're being whiny and lazy.
Yeah. And honestly, if anything, it makes it more clear and concise for me, I mean, obviously I'm not an accountant, but it makes it easier for me to visualize what's going on in the business, not more complicated.
Yeah. And you need people on your team who are going to support you in the way you need to be supported. Right. So if you want to have 100 accounts, like, I don't personally care how many accounts you have. I don't even know how many accounts at like 3 or 4 different banks. It's just, you do what you got to do. And, don't let the person that you're hiring to help you, boss you into something that you don't want. If you're like, no, I want to use this system, go find the professionals that are going to support you in using the system. Find the bookkeepers that can work in Profit First, the CPAs that will work with Profit First. We're out there. You can find this. You can, do a Google search. You'll find someone, or you can reach out to Profit First headquarters and they will connect you with somebody even better.
Absolutely. And, inevitably when you're first starting out, the nice thing about Profit First is it literally enables you to manage it on your own, right? Mm-hmm. So you're going to want to do that for the same reasons that Bette mentioned, that, making all those transfers and everything is a benefit to you, so that when you hand it off to a bookkeeper or a CPA or whatever the case may be, that what they're supposed to be doing, right? So, so I definitely appreciate you taking the time. Obviously, Bette, what is the best way for somebody to get in touch with you if they decided they wanted to actually have somebody handle all this stuff for them?
Yeah, for sure. So you can always email me. I have, it's a simple but long to spell email. It's bet@bettehochberger.com. You can also check out our website. You can schedule a meeting with me. Believe it or not, you get me. Those are probably the best ways. And we're all over social media. I want to say that we have a ton of necessarily profit first specific, you know, information out there, but it's not zero. And if you listen for it, sometimes we sneak it in without telling people it's profit first. But we're on
Awesome.
YouTube and Facebook, Instagram. We're all over the place. So just look. If you Google me, you'll find me.
Awesome. Very cool. Thank you so much for taking the time, Bette, and I look
Thank
forward to
you.
speaking with you again soon.
Fantastic. Thank you.